Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, August 18, 2023. Market turmoil, global concerns impact risk assets. In a week marked by escalating global concerns, risk assets across multiple markets experienced a tumultuous downturn. From European equities to Asian stocks and even the cryptocurrency space, a wave of unease swept through investors. Within this challenging environment, a number of key themes emerged, primarily stemming from China's economic landscape and the Federal Reserve's policy stance. European equities and Asian stocks face pressure. Amidst the turmoil, European equities faced a considerable blow, with the benchmark stock 600 witnessing a 0.4% decline. This decline marked the index's third consecutive weekly drop, a trend not observed in nearly a year. Similarly, Asia's equities were not spared, as benchmarks in Japan, China, and South Korea all reported declines. This collectively formed the worst week for Asian stocks in 8 weeks, underscoring the vulnerability of investor sentiment. China's economic challenges send ripples worldwide. China's economic challenges took center stage as apprehensions grew about its stumbling growth and the expanding housing crisis. The People's Bank of China took extraordinary measures to stabilize the yuan, indicating policymakers' efforts to counter the currency's weakening trajectory. With state-owned developers warning of widespread losses and Australian miners grappling with their reliance on Chinese demand, the repercussions of China's difficulties reverberated across borders. Global inflation and bond yields resurface. The resurgence of concerns over global inflation and escalating bond yields shook global markets. Yields on U.S. Treasuries retreated from their nearly 2007 highs. The reemergence of entrenched inflation and bond yields reminiscent of pre-financial crisis levels caused uncertainty about the sustainability of risk assets' resilience, casting doubt over market stability. Cryptocurrencies encounter headwinds. Even the traditionally volatile cryptocurrency market witnessed a downturn, with Bitcoin experiencing a 4.5% drop in a single day. This decline put the digital asset on track for its most significant weekly loss in 3 months. Contributing factors included surging interest rates, challenges in China's economic environment, and a lackluster summer trading season. Elon Musk's SpaceX selling Bitcoin also added to the downward pressure. Federal Reserve's influence on investor sentiment. Further adding to market unease was the revelation from the Federal Reserve's latest meeting minutes. Hopes that the central bank had concluded its rate-raising cycle were shattered as the minutes revealed the potential for a tighter policy stance. This shift in sentiment weighed on investor confidence, turning attention to the upcoming Jackson Hole gathering for insights into the Federal Reserve's stance. In this challenging landscape, investors grapple with uncertainty surrounding China's economic trajectory, the Federal Reserve's policy direction, and the broader implications of rising inflation and bond yields. These converging factors have ushered in a period of increased volatility and cautious decision-making across international markets. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Crypto market update: Bitcoin faces significant decline, Celsius recovery path, and Ether futures ETF prospects. In the ever-evolving world of cryptocurrencies, noteworthy developments are reshaping the landscape. Here's a roundup of the latest stories shaping the digital asset sector. Bitcoin's dramatic plunge and altcoin responses. Bitcoin, BTC, has experienced a sharp decline of 7% within the last 24 hours, constituting one of the most substantial sell-offs of the year. The world's largest cryptocurrency by market capitalization plummeted to levels unseen since June, trading around $26,400 at the current juncture. The crypto market saw over $1 billion in liquidations within a single day, highlighting the volatility inherent in the space. While Bitcoin's drop commands attention, other cryptocurrencies also felt the impact. Ether, ETH, witnessed a roughly 6% decline in the same time frame, while Solana's SOL underwent a similar decrease. Analysts attribute the sudden downturn to market dynamics and liquidations, rather than a single fundamental trigger. Celsius recovery strategy moves forward. Creditors of crypto firm Celsius are on the verge of voting on the proposed asset sale to the Fahrenheit Consortium. This step follows a judge's approval of disclosures outlining creditors' anticipated recovery rates of 67% to 85% of their holdings. This development signifies progress in Celsius' journey out of bankruptcy and the eventual reimbursement of customer funds. The company's path to financial stability unfolded amidst market disruptions and the arrest of former CEO Alex Mashinsky on fraud charges, which he disputes. Awaiting Ether futures ETF approval. In a highly anticipated move, regulatory authorities appear to be edging closer to approving Ether futures-based exchange-traded funds, ETFs, in the United States. Multiple entities have sought approval to list ETFs tied to derivatives contracts founded on Ether, rather than the cryptocurrency itself. Reports suggest that the U.S. Securities and Exchange Commission is on the verge of granting approval. While the crypto market already hosts ETFs tied to Bitcoin futures, the verdict on ETFs containing actual Bitcoin remains a subject of anticipation. This decision is of great interest to industry giants like BlackRock as they strive to introduce similar investment products. Market insight, funding rates and price volatility. The Bitcoin perpetual futures market has witnessed a significant drop in funding rates. Unlike traditional futures contracts, perpetual futures contracts do not have an expiration date and instead utilize a funding rate mechanism to align prices with the underlying index. A negative funding rate indicates an abundance of bearish short positions, with short traders compensating long traders to maintain open positions. Conversely, positive rates indicate the opposite. Funding rates on platforms such as OKX, Deribit, and Bybit have plummeted to levels below -10% in annualized terms. This decline coincided with Bitcoin's price slipping to $25,392, highlighting a prevailing bearish sentiment. As the cryptocurrency market undergoes continuous transformations, investors and enthusiasts alike are in for an engaging journey. From Bitcoin's price roller coaster to Celsius' ongoing recovery plan and the potential approval of Ether futures ETFs, the crypto landscape remains a dynamic arena where change is the only constant. Key events this week. Eurozone CPI, Friday. Some of the main moves in markets. Stocks. The Stoxx Europe 600 fell 0.4% as of 8:18 a.m. London time. S&P 500 futures were little changed. Nasdaq 100 futures were little changed. Futures on the Dow Jones Industrial Average were little changed. The MSCI Asia Pacific Index fell 0.6%. The MSCI Emerging Markets Index fell 0.8%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro was little changed at $1.0876. The Japanese yen rose 0.4% to 145.29 per dollar. The offshore yuan was little changed at 7.3034 per dollar. The British pound fell 0.2% to $1.2723. Cryptocurrencies. Bitcoin fell 4.2% to $26,483.09. Ether fell 1.6% to $1,690. Bonds. The yield on 10-year treasuries declined 4 basis points to 4.24%. Germany's 10-year yield declined 8 basis points to 2.63%. Britain's 10-year yield declined 7 basis points to 4.68%. Commodities. Brent crude was little changed. Spot gold rose 0.2% to $1,892.90 an ounce. In conclusion, we'd like to thank you for watching Market Briefing, market analysis and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.